Hey guys, thanks for tuning in. I know your time is valuable and important, so I appreciate you jumping on this webinar. My name is Jonathan Wield. I'm the managing partner for Unbridled Wealth. And today's webinar is specifically around unpacking this PPP loan, because round 2 is in full swing and the rules are changing every day, and it's a little bit different to round 1. So even if you successfully receive round 1, maybe you're having trouble this time, or maybe you didn't even know you could apply for it last time and you're a contractor, you're self-employed. So I just want to give you some basic info today and help you at least get a little further down the road when it comes to this program. So before I jump in, I just want to make something clear. I am not a CPA or an attorney. So if you do have specific legal or tax advice, I encourage you to reach out to a CPA or attorney. But I have experience in applying for the PPP loan, and across our brand, across the Unbridled companies, we have now applied for 25 approximately PPP loans across many companies, with upwards of $4 or $5 million successfully received and forgiven. So that's why I feel like I can speak to this a little bit. So as you'll see on the screen, we have a number of companies in the Unbridled brand across many different industries, and the rules work a little bit differently for everybody. So I'm not going to be able to cover everything today, and I'm not going to try to, because we've got an hour of time. I want to get through this content as quickly as possible and leave it open for you guys to ask specific questions. So as I'm sharing and you have questions come up, go ahead and write them down, send them off in the chat, and I will address those at the end of today. So let's dive in. Now, what is the Paycheck Protection Program, or PPP? I'm sure you probably know by now, but it's a government program designed to provide forgivable loans to businesses and individuals to keep people employed and businesses running during the coronavirus pandemic. So basically, it's this forgivable loan program you can apply for based on your payroll costs or how much you've been earning as a sole proprietor or a contractor. So how do you qualify for it? Again, I know this is super basic. I'm going to fly through it, but it's for people who were in business prior to February 15th, 2020. So before the pandemic hit, before we knew what was going on. The other requirement is you're still operational today. So whether it's you're a wedding planner or a photographer or a small business owner, is your business still going today? If you did apply for round 1 of the PPP, did you use all of that money? If you didn't need it all, obviously you're not going to qualify for round 2. But if you did use it all, then you probably qualify. The other thing is, this is for small businesses, so less than 300 employees. And here's what I'd say the biggest distinguishment between round 1 and round 2 is you have to show that you've had a loss of business, meaning a 25% reduction in a quarter in 2020 versus a quarter in 2019. So let me make it really simple. Let's say in Q2, so what's that, April, May, and June of 2019, you had in your business $100,000 of revenue. And in Q2 of 2020, because of the pandemic, you only had $50,000 of revenue. That is a 50% reduction in business from 2 comparable quarters. You qualify. You only need to have 25% reduction in 1 quarter from 2019 to 2020. And then the other thing is you've got to either be self-employed, so sole proprietor, a 1099, meaning you file a Schedule C on your personal tax return, or you're an LLC, so this could be a single member, it could be a partnership, there's 2 of you that are owners, it could be a multi-member LLC, or you're an S Corporation. Maybe you're even an LLC that files as an S Corporation. If you're a yes to all of these things, you probably qualify for round 2 of the PPP. So let's just talk about how much do you qualify for. So it basically works similar to how it happened the first time. It's 2.5 months of payroll expenses. So if you're, again, a contractor and your average monthly earning was $4,000, well, you'll get 2.5 times that. So 4 times 2.5 is 10. So you'd receive about $10,000 in your PPP loan. And so this cost, this amount you qualify for, is the average either from 2019 or 2020 or the last 12 months. The cool thing is you get to choose based on what's going to give you the highest payout. So if your 2019 earnings were much greater than 2020, use 2019. You're going to get a larger PPP payout. And just to give you some quick numbers, the max you can apply for or qualify for as an independent contractor, a gig worker, a sole proprietor is the equivalent of if you earned $100,000 per year. So that's your PPP loan max is about $20,833. But for a business, it's only capped at $2 million. So if you have 30 employees, you can apply and receive up to $2 million based on how much you've been paying in your payroll expenses. Okay, I'm just going to quickly touch on forgiveness as well. So the most important thing about this, right, is that it's forgiven, because otherwise it's just a loan and you got to pay it back, and nobody really likes taking loans. So the forgiveness program for PPP is designed to make it easy for you. If you are taking less than $150,000 in your loan, it's going to be much easier for you. If you're taking more, it's a little more complicated, a little more paperwork, but you're getting a larger loan. So if you're, again, sub 150,000, you're basically needing to show that you've kept your employees at the same rate of pay and the same number of employees from when you received the loan to when you fulfill the loan requirements. Those proceeds need to be used for specific things. So payroll obviously being the dominant one. It can be used for other expenses, which I'll get into, but at least 60% of those proceeds need to be spent on payroll. The other 40% can be spent on other things, which I'll go over in a minute. And then you have two options here. You can choose an 8-week period to be able to use the amount of PPP you receive, or you can choose a 24-week period. So we'll get into that a little bit at the end. If you're somebody who maybe has the option to file for unemployment and you're deciding whether to do the PPP loan or unemployment, it could be a scenario where you file for the PPP loan now, use that over the next 8 weeks, and then you file for unemployment if your business still hasn't rebounded. So we'll talk about that at the end. So if that's your question, I know that's a lot of people, just hang on right till the very end. So what are eligible expenses? And this is a little bit different to round one, but it's pretty much the same. And just so you know, if you didn't apply for round one, or even if you didn't feel like you qualified for round one, that doesn't exclude you from round two. You can still receive this Paycheck Protection Program loan. But here's the expenses that qualify. Your payroll costs, obviously, and that needs to be the majority, right? It's got to be 60% of your proceeds go to that. It can be a max of $100,000 average annual salary per employee. So if that's for you, it's for somebody else, it's for your employees. And then you've got facilities costs, so mortgage interest, utilities and rent, but some additional ones, some operational expenses, property damage, supplier costs, and worker protection costs. So you can see the list there. And this is an easy one. If you're like, hey, does this one qualify? Go ahead and type in Google what are eligible expenses for the PPP. There's tons of people who have done blogs and will share every single line item of what you can expense in the PPP. But majority of the time, you're looking at payroll costs. So this is where I want to jump into the meat of it. I know a lot of people I've talked to that either didn't realize that they qualify, or they don't know how to qualify, or what they qualify for, are the sole proprietors and independent contractors, or gig workers. So I just want to speak to this for a little bit because it can be pretty confusing. So if you're a sole proprietor, so you receive a 1099 MISC, or you're a single member LLC and it's just passing through to your personal taxes, what you're going to notice on your personal tax return is something called a Schedule C. So if you haven't filed 2020's tax return yet, that's totally fine. You can still qualify. Go ahead and look at your 2019 tax return and write this down. You're going to look for your Schedule C in your personal tax return, and you're going to go down to line 31, and there's going to be a number there. This is your essentially what they're qualifying as your net profit for your personal business. So maybe you're a web designer, or you are a photographer, and you've just been getting paid a check at every gig you go to. On your tax return, this is where it's going to be found. So you're going to pull that up, you're going to go to line 31, and you're going to see a number there. Let's say it's, for easy math, $120,000. And you're going to take that number and divide it by 12, so $10,000. Actually, that's a bad example because you can't qualify with a salary more than $100,000. So let's redo this. Let's say you look at line 31, it's $60,000. Divide that by 12, that's $5,000. That is your average monthly earning on your Schedule C, and that's how you'll qualify for your PPP loan. So take that $5,000, times it by 2.5, that's $12,500. That's how much you're gonna qualify for. So I do wanna give a caveat, because you may have been hearing in the news, especially if you are a gig worker or contract worker, the rules are changing and they haven't exactly established what that means. But what it looks like is gonna happen, instead of using line 31, meaning your net profit for your business, they're likely gonna allow us to use a different line on your Schedule C, which will be your gross profit or your gross income. So maybe you're looking at your Schedule C and you're like, my net profit, line 31, is only showing $4,000 because I did a lot of write-offs in 2019. Don't worry, the rule is changing. What I'd suggest is you hold off for about a week and just wait for this new rule to enact. We have until March 31st to apply for your PPP loan. We will send out an update as soon as we get new information on this rule change. But for now, just start getting ready. Get all the paperwork you need. Decide which person or which bank or which lender you're gonna apply through, and get your Schedule C from 2019 and just have it ready to go. But that's typically how it works. You're gonna look at what's your average monthly cost, times it by 2.5, and that's what's gonna qualify you as a 1099, as an independent contractor, as a gig worker. Okay, next I wanna talk to the business owners. So whether you own an LLC or an S Corp with employees or without employees, I wanna talk through what this process looks like to you. Because I've actually even had people recently come to me and be like, I've actually been declined the PPP loan. And I'm like, let me just take a look at your books. And they should have qualified, they just gave the wrong form to the lender. So here's my request. Don't always trust the lender when they say no, because maybe they're looking at the wrong form. So I wanted to start with business owners who do not have any employees. So that's just you. So let's first off talk about an LLC owner, maybe you're a partner in one, you have no employees, so there's no payroll costs. And so often, lenders will be like, well, there's no payroll costs, therefore you don't qualify. Not exactly true. As long as you're not taxed as an S Corp, you're just taxed as an LLC, then you still qualify. And here's how. So you're gonna receive a Schedule K1 on your Form 1065. And on your K1, this is what the lender needs to see. There's a line called 14A. I'm gonna skip forward so you can see this. So top left, you'll see, if you're looking at your tax return for the business, you can see Schedule K1, Form 1065. That's how you know you're at the right place. It's different to Schedule K1 1120S. If you see that, then I'm gonna get to you in a minute. But Schedule K1, Form 1065, what you're looking for is line 14A. This is the number. And so what the lender's gonna do is they're gonna take that number, they're gonna divide it by 12. It's actually a more complicated formula, which I won't get into. You multiply it by 0.9325, then divide it by 12, and then you times it by 2.5. So if you want some quick math, just get ballpark, times that number by 0.93, divide it by 12, multiply it by 2.5, and you'll get the number you're looking for, or what the lender is looking for to qualify. So if you're doing this, don't send in your full tax return, don't send in all that stuff. Give them Schedule K1, because that's really what they're looking for, and hopefully that will help them understand what you're looking for. So let's now talk about the business owner who is filing an S Corp. So if you're filing as an S Corp, whether you're an S Corp by your original startup paperwork or just by designation for taxation, you're going to have received a Schedule K1 1120S. This does not qualify. So this is where it gets tricky. If you don't have any employees, but you're taxed as an S corporation, you actually won't qualify for the PPP. That doesn't mean that there's not a way around that, but right off the bat, if you're an S Corp, you should have filed a Form 941, which we'll get to with businesses with employees. So if you're here today and you're like, yeah, I filed as an S Corp for 2019, but we didn't do any Form 941. I just paid myself through the profits of the company. That's going to be a challenge. So there is a way around it, and it probably would look like filing differently for 2020. So that may be a situation where you want to reach out and let's just have a conversation and see if it makes sense for you financially to even do a change of designation when you file your 2020 taxes. But that form there, the Schedule K1 1120S, is not going to be helpful for a lender when it comes to PPP. Okay, so let's now talk about businesses with employees. So whether you're an LLC or an S Corporation, if you do have an employee, you should be filing Form 941 every quarter with the IRS. And Form 941 basically shows you, I'll show it right here, it's what you send to the IRS to let them know how much you're paying in payroll and how much you owe in payroll taxes. So this is what they're looking for. So either for 2019 or 2020, you're going to get your 941s. Go to your bookkeeper, go to your CPA, go back and look at your tax filings and find there'll be 4 for 2019 or 4 for 2020 of Form 941. So each one is a quarter. So you can see on the screen here, this is the number, the box you're looking for. It's line 5C and it's column 1. So you're going to take, okay, all 4 quarters of Form 941 for 2019, add up that number in that box on all 4, and that's going to give you your annual payroll costs, your annual payroll expenses. So you can divide that by 12 and times it by 2.5, and that's how you're going to land at the number for which you should qualify for PPP. So again, you're going to take all 4, so you can use 2019 or 2020, whichever's the highest. Add all of them up, divide them by 12, and they'll give you your monthly average payroll costs, and then multiply that by 2.5 to find out how much you should qualify for PPP. Again, I'm just going to give the caveat. There's a lot of complexities and nuances that come into all of this. I'm giving you kind of the basic overview, simple. There's a couple of other line items which are unusual, which may take into effect in your situation, but most of the time, this is what they're going to be looking for. So if you do have other questions, you want to review it, then again, just reach out to us. Okay, I want to go through how do you actually apply for this loan? Because it's a government program, it's by the SBA, it's the CARES Act, you've heard all of these terms, but the money isn't actually given out by the government. They have partnered with banks or credit unions or lenders that can provide you the cash, and it's backed or paid then by the government. So you can go to wherever you do your business checking account, whether it's a local bank or credit union, or maybe it's a Wells Fargo or Bank of America, and that's a great way to do it. I've got another couple of options for you here as well, because I found, I bank with Wells Fargo. Not a huge fan of their process when it comes to the PPP. They still haven't provided forgiveness applications for round 1. So this time I was like, maybe I should go somewhere else. So we've got Funding Circle, which I've used, Fundbox, which I've used, and Lendio, which I haven't yet used, but I've heard they're a great resource to go to. So Funding Circle, for me, it's been the easiest one. Just go to fundingcircle.com. You just follow the prompts, and it should walk you through everything. But knowing what we've talked about the last 10 minutes, knowing what form you're going to send them is vital, because the person that's doing the underwriting may not actually know. They're just looking to tick a box, and they've got hundreds of thousands of applications coming across their desk, so send them the right form. So if you go to any one of these, they should be able to help you. Okay, I wanted to end with this one question because I've got a feeling that at least some of you are going to ask the question here at the end. And just a reminder, if you have questions coming up, we're going to answer them shortly, so start typing them in the chat and we're going to get to them. But here's the question: should I apply for unemployment instead? And unfortunately, it's not a black and white answer, because for some people, yes, that would make more sense, and for some people, no, it wouldn't. And here's why. Okay, so let's talk about your 2020 income. If we talk about it in quarters, so Q1, Q2, Q3, and Q4. So the first 3 months, next 3 months, next 3 months, final 3 months. If you were in a situation where you're like, hey, in 2020, I earned $9,000 in Q1, and then the pandemic hit and it went down to 0. And then things started opening back up again, and you earned $9,000 again in those final 2 quarters. And today you're in a situation where you're kind of self-employed, but you don't really have work going on, and so you don't have income. So you could file for unemployment, or you could request a PPP loan. Which one should you do? And what's interesting in this first case, you'll see that if you were to file for unemployment, and I'm talking about the state of Colorado, just to be clear, because every state is a little bit different. So again, you can do some research for yourself. There's unemployment calculators to help you discover how much you would actually get. And so that's state by state. On the federal side, on the PPP side, it's the same for everybody. So unemployment in Colorado, in this case, you would be looking at 2020, look at 2 consecutive quarters, so $9,000 a quarter, so an average of $3,000 a month. The way that, I'm just gonna give you the quick math rather than going through it, but this person would earn about $400 a week in unemployment. And again, there's some other nuances there, but assuming this $400 a week, with the CARES Act that passed, you get a bonus $600 a week from the federal government. So this person filing for unemployment would receive $1,000 a week. So over the next 8-week period, they would obviously earn about $8,000 if they did unemployment. Okay, we take that same person, they're like, actually, I want to apply for the PPP loan. So the way we'd work it out is we'd add up the annual income, so $27,000 here. Here's where I'm going to need some help with my math. So we're going to do $27,000 divided by 12, which equals $22.50. I got somebody helping me with the numbers here. Okay, so $22.50 times by 2.5. $56.25. Equals $56.25. So if I said, hey, over the next 8 weeks, because that's how long you got to spend the PPP, would you rather $8,000 or $56.25? Obviously, you would rather receive the $8,000. So in that case, in this person, unemployment may actually be the best way to go. And yes, you can do PPP and then file for unemployment afterwards. But you know, if cash is king and you need the money now, unemployment may be the way to go for you. However, let's take a scenario where you made $25,000 in Q1, went down to 0, and then again went back up. So $25,000 a quarter. So for unemployment, there's a cap. So in the state of Colorado, at least, unemployment, there's a cap of $618 per week. And then obviously we talked about the bonus $600 a week, which will last until July 31. So you would receive $12.18 a week. So over the 8 weeks, $12.18 times by 8 is $9,744. $9,744. So that's what you would receive in unemployment benefits. Okay, with PPP, over that same period, so you'd look at what have you earned in 2020. That's $75,000. 75,000. Again, we'll divide it by 12 to get the average monthly payroll, which is $62.50. I apologize for my handwriting, but hopefully this gets the point across. Okay, so your average monthly payroll is $62.50. Times that by 2.5.
15,625.
And you get 15,625. Okay, would you rather 9744 or 15,625? The super cool thing in this scenario is you could do the 15,625, use that for 2 months, and if you still don't have work that's picked back up, then you could jump on and start doing the unemployment afterwards. So in that situation, doing the PPP is definitely a superior strategy. So you may have just watched that and you're like, I have no clue what you're talking about. All I see is numbers. And you're like, I don't work that way. That's totally fine. That's why we want to be a resource to you. And we want to be able to provide you with a free consultation and just help talk through this. Because look, we're all in this together. That's what I think we have to take away from 2020 is that we're all in this together. This affected everybody. So whether you're a wedding planner or a photographer or a web developer or you own a small business, we want to be here as a resource to you. So reach out to us. We've actually got a form on our website, so unbridledwealth.com/consultation. And I'm just going to ask for some basic information. And we've got a team here that can sit down with you. If you fill that out, so here's the thing. If you just want help with the should I do PPP or unemployment or what form do I need, fill that out and we're just going to email back and give you some basic information. Or if you're like, hey, I actually want to sit down and talk through a financial plan. Let's talk through a plan for my business, for my family, and this is the time that I want to start digging into a financial strategy. Then again, just do the exact same thing, but mark on there that you want a consultation. and we'll set up a time to sit down with you and just talk through a strategy for you, your business, or your family. So hopefully this has been of value to you already, but I'm sure lots of you have questions, so we're going to go ahead and open up the chat feature, and we'll stay here as long as you need to answer those questions. And again, if we need to do a follow-up, then we can. But Narcissus, maybe you could kick us off by asking one of those questions that has come in.